Good afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you set up on what's happening around the business world. The government shutdown continues is the easiest way to put it. I was going to get all fancy with words, but they're still fighting and still arguing over the same stuff here. Multiple weeks into this shutdown. No end in sight on that. How's that working around the economy? The CPI report scheduled to come out this Friday. Some question marks on how reliable that's going to be, if it can be relied upon, with the Bureau of Labor Statistics, having a skeleton crew here getting those surveys out to everybody. So a lot of anxiety out there around the markets in terms of that. Companies are reporting. Got a stat here on early reporting numbers here from companies we'll talk about here later on in the show. But first, let's get right into that Market Watch. Here on this Wednesday, a lot of red out there on the stock market. Trade fears, no shocker here, are creeping into the market today, even though a lot of success here from companies reporting here on this Wednesday and late yesterday with Netflix reporting after the bell out there. So right now, Dow Jones is down the 414 points, 46,539 for it. The S&P 500 is down 60 points to 6674. The Nasdaq's down 402 points. It's at 22,550. I don't even know why up is in my wording today, in my thought process with all of the red out there. That small cap index, the Russell 2K, down 56 points right now. 2433 for the Russell 2K. And then Bitcoin, well, gone backwards again today. Got up to that 111,000 yesterday. Well, right back down to 107,918 for Bitcoin today. And so trade wars, no doubt about that, are still out there. The trade fear side of things with China and the U.S. kind of battling it out still. And then just reporting is good, and people are revising their numbers up. A lot of the companies, as we told you here this week out there. And just we're going to have days like this. I thought we would kind of see that on Friday with the CPI numbers coming out. Not necessarily that the report will be bad, but more so people not trusting that report coming out, of course, from the Bureau of Labor Statistics amidst this government shutdown. But getting it here on this Wednesday, stocks we're paying attention to right now, well, as we told you, well, first of all, things to look ahead that could kind of affect the market. Tesla does report after the bell today, the CPI report on Friday morning as well. And then Netflix reported yesterday after the bell. We were waiting for that. And that's our first stock that we're paying attention to today. And they're down the 9.79% here so far today from Netflix. Now, keep in mind, Netflix is the largest streaming platform out there. So if Netflix is having issues, the other ones are probably going to have issues as well. Their third quarter earnings was $5.87 per share, well short of analyst expectations. Analysts were expecting $6.97 in earnings at that point. So over $1, basically $1.10 missing of those expectation levels for Netflix here in this quarter. Revenue, though, was in line with the expectations. It came in at $11.51 billion. But that's a big miss there for Netflix. Keep in mind, they don't report their numbers anymore in terms of who has memberships, etc. out there. Something to keep an eye on here with the largest streamer, because it is going to affect the other guys out there as well. And next up, let's go to the gambling site, DraftKings, as of right now. They're up here today, 2.78%. Well, they unveiled plans to acquire prediction market platform, the one called Railbird out there. It's going to use the trading platform of Railbird, their technology, the management. So they want to create their own events contract offering. They're going to call it DraftKings Predictions. So they're buying that Railbird to get into that predictions market. DraftKings is here today, and they're up 2.80% as of right now. And then there's Krispy Kreme out there, the donut chain. Well, up 13.48% here today. Well, they're one of those meme stocks out there that have been trading higher this week. We talked about Beyond Meat earlier in the week. We'll talk about them here in just a second. But that meme stock trading activity is continuing to drive a lot of these stocks up. Krispy Kreme, well, they were up 14% yesterday, 13.21% right now today here on Wednesday as well. And this Krispy Kreme is a meme stock. Well, the big one that's caught everybody's eye this week is Beyond Meat. So we're going to look at their stock right now as well. They were up 149% on Monday, 140% yesterday. Beyond Meat was, and if we have that stock, go ahead and put it up. If not, I'll just talk about it here. But plant-based meat alternative company is Beyond Meat, and they're up again today, 16.02%. They were up over 29% earlier, as you see on your graph there, before coming down to the 16.02%. So they're still having a meme-fueled run up here, even though it has been down here as the day's gone on. But meme is fueling this here. So the 140% yesterday beat that big gain on Monday. It was the largest ever one-day gain for this stock. And also, the other news out there about Beyond Meat, well, they signed a deal with Walmart to expand distribution. So they're going to allow their stuff to be put into Walmart in terms of getting it out to people. And then earlier this week, Round Hill Investments, well, they added Beyond Meat to its meme stock ETF. That's the meme. It's MEME on the stock exchange, if you're following that out there as well. So they were added to that meme stock ETF out there, which just has a bunch of the meme stocks lumped into one side of things. And Beyond Meat having a very good week as well. But, they are definitely off of what they've been at the last couple days. Still only trading at $4.10, even with that distribution deal with Walmart, which has to be a big deal for them in terms of distribution and, for the people that want that meat alternative out there. When we come back later and look at the stock market here on this Wednesday, we're going to look at Oklo. They're a nuclear power startup company in terms of development, the small nuclear power stuff. We'll look at Oklo. Winnebago Industries. Are you guys out there buying a lot of RVs, recreational vehicles, and Winnebagos? Well, we'll look at their stock and find out what they're at. And then we'll look at a local regional bank here in Phoenix where we record the show. Here in Arizona, at least, Western Alliance we'll look at coming up as well next time we come back and look at the stock market. But first, we got some updates here in terms of, nothing on the government shutdown. But we do have updates on that HB1 visas. I'm going to try to call it right today. I always want to call it the H1B1 visa. I don't know why I do that. But as we know, President Trump signed that proclamation that requires companies to pay a $100,000 fee for those H-1B visa applications. We had no details before, where we got some details here over the last couple days. And details were given from the U.S. Citizenship and Immigration Services Department. Here are those details for them out there. And I did see earlier today Walmart suspending their H-1B process in hiring people there because of this fee. I saw that come across the ticker earlier today. So the H-1B petitions filed on or after September 21st of this year, 2025. Basically, anybody outside the United States and you do not have a valid H-1B visa, well, it must be accompanied by that $100,000 payment as a condition of eligibility. So September 21st was the cutoff here, and anything after that is that $100,000 fee. Now, we had kind of rumors before, but we do have confirmation now the fee does not apply to any previously issued and currently valid H-1B visas submitted prior to that September 21st date there. So fee will not apply before that. The fee does not apply to petitions requesting an amendment, a change of status, or even extension of stay. No fee, no $100,000 fee for those ones there as well. But if the worker is ineligible for the requested amendment, the change of status, or the extension of stay, the application would start new, and then that's where the fee would be applicable, $100,000 fee moving applicable out there. Now, there's some lawsuits going around about this fee, but we did get some clarification officially now. We've heard some of those rumors before that it was going to be, but it is official here as well that it is that fee, which tells me companies aren't going to have somebody apply for the H-1B visa unless they're a skilled worker, right? There's a lot of accusations, and it's been happening where a lot of these companies we're bringing in unskilled labor from these other countries to pay less, to be honest with you. So maybe this stops it. And the fee goes from $3,600 is what it was before to that $100,000 level as of September 21st, a month ago. Hey, some updates here. We told you yesterday, Warner Brothers Discovery, and there was a stock that we paid attention to yesterday. Well, they previously announced those plans to separate Warner Brothers, and then it's Discovery Global. Well, they wanted to move them into two companies. They announced this earlier this year, end of last year, I believe. But after they announced that, they said they've got a ton of unsolicited interest from multiple parties for both the entire company combined and of the separated companies individually, those two companies. So the Warner Brothers gave the board of directors, something to think about with this unsolicited interest in the companies. It was back in June. I knew it was this year. I was trying to remember how long ago it was. It was back in June the company was splitting the studio and its cable networks into those two different companies. That's where that Discovery Global Networks comes in. That's going to include CNN, TBS, TNT on that Discovery Global Networks as well. Everything else would be in the Warner Brothers side of things. The plan was for the current CEO to leave the streaming and studios business after the split, and the current CFO would lead the global networks unit when that split happens. Warner Brothers Discovery will evaluate the broad range of strategic options, and that'll include continuing to advance the company's planned separation. And they want that completed by mid-2026, if that's going to happen. So now the other side of it is they're going to evaluate the transaction for the entire company. We've already know Paramount Skydance has already made an offer for the whole company, which was rejected by Warner Brothers Discovery. And Warner Brothers Discovery basically said, come back with a higher price if you're being serious about this. So we know one company is Paramount Skydance out there, so a lot of issues here by the board to consider. And the board even said they will consider an alternative separation structure that will enable the merger of Warner Brothers and spin off Discovery Global to their shareholders as well. So they're open to anything is the moral of this story here and follow-up story. Warner Brothers Discovery also noted there's no deadline or even a definitive timetable that is set for completion of which, alternative review process they're going to go towards or work towards as well. So the company does not intend to make any further announcements regarding this review of which the alternatives that they're looking at, unless the board approves a specific transaction or otherwise determines further disclosure is appropriate or necessary moving forward. So, so we won't hear anything unless we hear of a company making the offer for the whole company, or at least parts of it, right, as they're splitting it up. But there's your update there on Warner Brothers Discovery. So we saw Paramount get sold off to Skydance as they merged. Now another big one, Warner Brothers Discovery. What's going to happen there? Is it going to get bought up by a big conglomerate? Is it going to be split up into two different entities? Fascinating to watch this media and these large media empires kind of get swallowed up in multitude of ways out there. And hey, if you're tired of the Chrome browser, you don't like Google, right? You don't like the other browsers out there, Firefox, for instance. Well, maybe you'll like this one. And they're going to integrate, obviously, a lot of AI into the browser. OpenAI, they introduced its own web browser yesterday. It's called Atlas. As well. They put the Chat GPT into the system and in direct competition with Google as more internet users rely on artificial intelligence to answer your questions when you put them out there. Making its popular AI chatbot there, OpenAI is, the Chat GPT. It's a gateway to online searches, and it could allow OpenAI to pull in more internet traffic and revenue that can be made by digital advertising with this browser service. It could also, and this is the fascinating part of this, it could cut out the lifeblood of online publishers because ChatGPT could effectively feed people summarized information that you don't have to click on any links to get more information out there like you currently have to do. To get the summary, you have to click on the link to read the rest of it. If ChatGPT's AI does a good enough job, no people will be going to these sites and driving revenue to those sites as well, right? As people won't need to explore the internet out there and click on these web links. So this is fascinating how this could change the market in terms of browser services. OpenAI said Atlas it launched yesterday on Apple laptops. It'll later come to Microsoft Windows, Apple's iOS phone operating systems, and Google's Android phone system at another date. We don't know the date of that yet, but it is available on those Apple laptops if you're interested in that OpenAI browser called Atlas out there. Another one hitting the market. And then, as we said, we do stocks we're paying attention to, and we're doing a lot of reporting stocks right now. Trust me, if we had to, I could go through probably already, 50 different reporting stocks just this week. We focus on three or four each segment. But here's the synopsis we have of the reporting companies. 85% of them on the S&P 500 firms, well, they've reported their third quarter earnings so far. The ones that have reported their earnings so far, they've surpassed profit estimates, and they're on course for the best performance since 2021. This is all according to data that I found from Bloomberg Intelligence that they put out. It's still early in the reporting season. We're just getting started on it, but given there's only a fifth or so of the index's market capitalization has even announced their results. But it is an indication that U.S. profits remain strong in the face of the tariffs, but also this uncertain economy that we're all kind of navigating right now. A majority of the S&P 500 firms typically surpass the expectations. That's not unusual. But this so far, this third quarter reporting, well, it stands out considering that analysts had set the bar higher by raising projections heading into this reporting period. Robust earnings and signs of sustained investment in artificial intelligence, well, they're kind of, being a counterweight to the threats of stocks from China, trade tensions, and even this government shutdown, right? So AI is still driving this market here this year. Positive numbers from people reporting so far. I expect it to continue. Netflix missed on the earnings per share, but hit the revenue side. We'll see, of course, what Tesla does today. And Tesla, you got to kind of pay attention to the deliveries side of things more than anything. But we're having positive results, although all you hear out there is how the economy is teetering on the edge and government shutdown's not helping either. Something I guess, good to see in terms of the reporting side if you're into that market and the indexes. And then we can go a little bit farther here and look at some data from subscription analytics firm Antenna is what they're called. This was all reported by the New York Times. They compiled this data out there is where we find here. But remember the Jimmy Kimmel incident with Disney and people were threatening to quit Disney. And a lot of times when you do that, people don't actually quit it. Well, we found out here from Antenna and the New York Times that Disney Plus lost about 3 million subscribers in September. Yes, that was when they suspended Jimmy Kimmel for that comments regarding Charlie Cook's assassination. So 3 million subscribers, but that's a lot. But how does that differ from any other time? Well, it's about twice as much as the 3-month average loss for Disney Plus. And usually the 3-month average is 1.2 million subscribers. That's a lot of people. Now, the streaming services have what they call the churn rate, right? That's the percentage of subscribers who cancel monthly. Because some people will sign up, watch the programs they want to watch, and then cancel it, so they only pay for 1 month. That also doubled for Disney Plus. It jumped from about 4% in August, went to 8% in September as well, according to that Antenna survey company. Hulu, which is another service owned by Disney, well, they saw a similar trend. They had 4.1 million subscribers leaving the service in September, and they usually had just 1.9 million just a month earlier at that time. So about double again. So people really did boycott Disney Plus, Hulu, any Disney properties with that suspension of Jimmy Kimmel at that time. Hulu's turn rate, well, it went to 5%. It was at 5%. Well, it went to 10% during that same period here. So people did speak with their consumer dollars out there as well. However, big numbers, right? Double the amounts of people left in that time frame. But even though there's a double amount, right, the spike there in the cancellations, both Disney Plus and Hulu actually saw a significant increase in subscribers in September. So even though the cancellations were higher, even though the churns were higher for Hulu and Disney Plus, well, they had that huge increase in subscribers in September at the same time. They gained, Disney Plus did, about 2.2 million subscribers in the U.S. alone. Hulu, well, it added about 2.1 million new subscribers as well. So that's 10% increase for Disney, 5% increase for Hulu from that perspective compared to August. So yes, a lot of people got rid of their services, but a lot of people signed up for the first time also with that controversy there of Jimmy Kimmel. So they didn't lose anything for the most part. I mean, they lost some, but they lose stuff people every year from that perspective. With that Jimmy Kimmel controversy that happened out there, just fascinating numbers in my eyes. Because how many people went, oh, you canceled them. I'm going to sign up and reward you now compared to the people that canceled, right? It's interesting how that works out there. And, so we're just getting these raw data numbers out there. And one number that I'm excited about in terms of entertainment, I love Coca-Cola, and I love it in certain ways. I love it in the cans. I love the Mexican Coca-Cola. I can't get enough of it with the cane sugar as opposed to the high fructose syrup. And I don't drink it in a lot of other formats because of it. And we know the cane sugar version's coming out here in America as well, and it's officially begun selling that soda that uses the cane sugar out there. High fructose corn syrup is not good for you. Either a lot of cane sugar, by the way, but that's at least a little bit healthier. Well, in my mind, it's healthier out there, but it does taste a lot better as well. So the soda is rolling out in select cities and retailers at this time. They will be expanding that out, of course. Some international versions of Coke do use the cane sugar, like I said, especially the Mexico version. That's what I don't get. They're doing it everywhere else. Why do they change it? Well, it's because high fructose corn syrup is a lot cheaper than cane sugar is as well. And they already use cane sugar in other beverages it sells in the United States. Things like Simply Lemonade, they do. Gold Peak iced tea, Costa canned coffee, it's regular cane sugar. Corn syrup is common and a cheap sweetener, and it's why Coca-Cola made the switch many years ago. Not a shocker there. Save money. Sugar-filled soda, though, isn't healthy, according to health experts out there. Whether it's made with cane sugar or corn syrup, but cane sugar is healthier than that fake corn syrup stuff out there. Well, the arrival of this cane sugar syrup, well, Coca-Cola is having success with sugar-free sodas and healthier drink options. Things like Body Armor being relaunched, Smart Water as well. They're having a lot of success with that. People are stopping to drink soda as well, especially the younger generations. Just switching back to cane sugar kind of get people back on that sugar banner. I can tell you this: I'll just take my money. I want the cane sugar version. I don't want this other version. I'll pay what it takes to get it as well. And even then, I'm trying to get off of soda, but might have to keep that around. A highlight for Coca-Cola has been their zero sugar version. That volume has grown 14% globally as well. Coca-Cola reported that just on Tuesday with their third quarter earnings out there for Coca-Cola. So pay attention to that version coming out here as well in the United States for that. And, nationally, let's talk a little bit about that. We are going to do a local gas story coming up here after the break, but gas prices nationally could drop to the $3 mark for the first time in the last 4 years. This is all according to AAA that they put out yesterday. The national average price for a gallon of gasoline, well, it dropped to $3.05 last week. And the main reason is falling crude oil prices that have been happening over the last week, but also lower gasoline demand. And then the winter blend gasoline is a cheaper version of it. So all those factors together mean gas down in the low $3 range nationally out there. As I said, we'll have an Arizona story coming up for you in just a little bit. The last time the national average reached $3 per gallon, we have to go back to May of 2021 at that time. As of yesterday afternoon at close, West Texas Intermediate futures, well, they're trading around $57 per barrel. Not much different from that here on Wednesday when I looked at it about 10:30 our time, Phoenix time here. Cheaper oil prices, well, they benefit consumers because crude makes up the largest portion of the cost per gallon of gasoline. So it's about 51% of the price of gas, crude oil is into that side. So the cheaper that is, cheaper gas prices goes. And that's the national number, as I said. stay tuned for the local part of it coming up. But want to finish up with this because Cracker Barrel CEO, her name's Julie Fells Massino. He was the CEO that kind of led the charge here for the remodel and the logo change that has since been walked back by Cracker Barrel. But she told an investing conference yesterday that the company updated its logo so that it was more visible on highway billboards. That's what she told them. And I'm here to say she's a liar. She also noted that the move wasn't meant to be ideological, meaning the DEI side of things that they were accused of and stuff like that. But I wanted to note here, because when I saw this story and I saw her language, I went, wait a minute. That's not what they said when the controversy was raging. So I went back and I found what they said when the logo change happened and kind of how they justified it with Uncle on the thing. Because the company, Cracker Barrel, said initially when they defended that decision to change the logo, they said Uncle Herschel character, right? Because they took him off of there. They said back then. Now, keep in mind, she said it was to make it more visible on highway signs. Well, back then when they first defended this, they said that Uncle Herschel character, quote, will still be on our menu. Okay, perfect. Sounds like a plan. But then also on road signs and featured in our country store. He's not going anywhere. He's family. But then the CEO yesterday is telling investor conference they made the change for the road signs. Can't even get their story straight, Cracker Barrel. What a disaster of what's happening to them. And just this call out is just ridiculous from that side. I don't get why you have to lie about it. Just say you made changes and it didn't work out and we had to change it back because we're stupid. That's all you got to say. Just put a press release out that said we're stupid. Stop trying to make it out and stop trying to pretend like you're higher and mightier and you didn't do what you did. Embrace it and move on. Liars. Hey, the WNBA. Well, they have bigger television ratings. They have bigger revenues now, especially with the TV package. Ticket sales, well, they continue to grow as well. We all know all throughout this season, the players have been, begging for higher pay as well from the WNBA owners and things. Well, that collective bargaining agreement between the WNBA Players Union and the WNBA League, it's set to expire coming up next week on October 31st. So obviously we're in a renegotiation period here with the WNBA as of next week. Well, NBA Commissioner Adam Silver addressed the WNBA collective bargaining agreement yesterday on the Today Show in an exclusive interview there with Craig Melvin there on that program. So if you don't know, the NBA owns 42% of the WNBA. There's a WNBA commissioner. Her name's Kathy Engelbert. She reports to David Silver as well. So there is a very integrated thing. A lot of NBA owners own teams in the WNBA as well. They're integrated in a lot of levels. David Stern, the NBA commissioner, was asked if the WNBA players should be getting a larger share of revenue within the WNBA. His response was yes. He went on to say, quote, I think share isn't the right way to look at it because there's so much more revenue in the NBA. I think you should look at it in absolute numbers in terms of what they're making, and there are going to be a big increase in this cycle of collective bargaining, and they deserve it, unquote. See, in the NBA, when the NBA collectively bargains, they talk about the percentages of it, right? NBA players make 50% of the revenue into the league out there. And the WNBA, well, they're talking dollar amounts because it will be a smaller amount than the percentages on that side. Right now, WNBA players get 9.3% of league-generated income under what the collective bargaining agreement that expires here next week. NBA players, as I said, 49 to 51%. So that's why I say 50% of revenue there in the NBA side with their own collective bargaining agreement. The players want more percentages because they'll get more revenue with the percentage of it. And as the revenue goes up, their pay goes up, etc., right? The money that goes to them goes up as well. If you talk just dollars and cents, like David Stern said they want to do, well, you can restrict the growth side of it out there. So we got some explaining to do here as these two sides collective bargain. Here in October 31st is when it expires. The league starts up again, right? Back next April, May time frame. And It's going to be a lot of slow play here over the winter months going into next year. And see if they get a season off is what we're going to have to pay attention to. And when we come back here at McCollum on Business, we keep it going. Some local stories coming your way. We're going to look at Oslo, Winnebago Industries, Western Alliance as well. Hey, are you tired of all the discounts and everything happening out there? Well, if you're not, you're alone. I got a story for you coming up on that as well. Arizona gas prices, maybe some new things to alleviate some of our gas headaches. All that and more. Come on back. McCollum on Business. And we're back here, McCollum on Business, of course, Wednesday edition. Appreciate you joining us. If you're joining us live here at Robat TV, I appreciate it very much. Of course, earlier today, we got the main event in the can. Scottsdale Christian Academy head coach Mike Sheehan joined us for the weekly Bird's Eye View coaches segment there. Big game for them coming up as they're in playoff mode. You got Arizona Lutheran Academy here this weekend on the road there at their place. And then, of course, playoffs underway after that officially coming up here for SCA. That was earlier today. And it's in the can, so check that out on demand here at Robat TV on free YouTube channel as well. Just do the search for the main event, and it pops right up. And then, of course, the free podcast systems. All your podcast systems out there, you can find it as well. However you listen to us, at least like and subscribe the YouTube page and the podcast systems. We'd greatly appreciate it. And I kind of have all of the shows that my company and Kobe and Riley and Ethan's company all do here as we produce our shows here with Robat TV for the live side of it. Of course, the Pit Stop, the Look Back show to Talladega last week is up also, Robat TV and the free YouTube page on Podbean right now. Only just search the Pit Stop Talk is where you can find that on Podbean. And, of course, on X as well, you can find the pit stop there. We're getting down, a couple races left until the end of the season. And, of course, next weekend, not this one coming up, but the Halloween weekend, the championship races here happen here in Phoenix for the last time around NASCAR here in Phoenix. Then we go back to just being a regular playoff race coming up after this year. That's up for you as well. The Real Matrix is here as well. Episode number 5 gets put up. It's all scheduled to go noon today. We wrap up this Robat TV. It's got its own channel there. The Real Matrix. Check that out for those of you with subscriptions. Free podcast as well at The Real Matrix. If you search that on Podbean, on the free YouTube page as well. The Real Matrix for those of you that want to follow the journey there of the Angry Patriot and his thoughts on the government and how they operate, etc. If that's your type of programming, check it out. It's an interesting show. I follow it. Obviously, I see it there as we put it up for him. And today at noon is the new episode. Every Wednesday at noon, you'll see a new episode from the Angry Patriot and his guest. as well. And then, of course, this show, as soon as we're done here live at 11 o'clock, we put this up at Robat TV and on the free YouTube page. So check it out. Join us. Appreciate your support as well. And, folks, let's get right back into it with that Market Watch. Trade fears. Even though good earning numbers are out there, markets in sell-off mode today. Dow Jones is down that 410 points still. The S&P 500 is down the 57 points. And NASDAQ's down 366 as of right now. The Russell 2K down 50 points. And then Bitcoin, well, it's up from that 107,000 level it was at the beginning of the show. 108,157 for Bitcoin here as the day goes on. First stock we're looking at in this segment, Oklo is the first one. They're a nuclear power development company. They're a startup company. They're kind of trying to design those portable or those small nuclear power energy stocks and everything. Well, they're down today, big, 16.27%. Financial Times came out with a story today. Read the story there, and they basically noted that Oklo's 500% advance here in 2025. And their $20 billion market value, well, they're saying they're at that level with no revenues, no license to operate reactors, and no binding contracts to supply power to anybody out there. Financial Times basically saying this stock has been run up 500%. Nobody knows why. They have no way to generate money out there. So interesting story there. And they're down 16% today. 15.98% as of right now. Then, Winnebago Industries. Are we buying enough RVs out there? Well, they're up 27.20%. Winnebago, of course, big manufacturer, motorhome manufacturer. They're up, like I said, 27.32% right now. Strong fiscal fourth quarter report for them. Winnebago Industries reported earnings per share of 71 cents. The estimate was 53 cents per share. Blew it out of the water for them as well. They reported revenue of $777.3 million for their fourth quarter. The expectation was only $727.8 million on that side. So, yes, y'all are buying a lot of recreational motorhomes out there. Winnebago Industries through the roof here today based off of those numbers. And then Arizona-based regional bank will look at Western Alliance. Regional banks have been in the news this past week. It's kind of been squashed, but questionable loans and how much their exposure is to those bad loans out there that companies going bankrupt. Well, Western Alliance is up 2.68% here today as well. Their third quarter earnings were $2.28 per share. The analyst expectation was only $2.09 per share at that point. So they also had $838 million in revenue. That exceeded $880 million forecasted here for the Western Alliance Bank, based out of here in Arizona. So a little regional bank in Arizona doing well, which obviously helps the economy here and jobs and everything here in Arizona. And good for them, especially with a lot of uncertainty around those regional banks. And then, right, as we get into the stories here, the new report from a consulting firm out there, it's called Alex Partners. Well, they released this report earlier today, and it says consumers are suffering from discount burnout out there. It's not good news for retailers if we're all tired of the discount burnouts, because you got Black Friday coming up, Cyber Monday coming up as well here. So the firm surveyed more than 9,000 U.S. consumers on their preferences and priorities across 140 retailers and 9 fashion sectors is what they're looking at. So they focus mainly on fashion side, FYI. They found shoppers see price increases as inevitable, which I agree with. Everybody has price increases. It's just a matter of how much, especially once a year, preferably, instead of 90 times a year. But cost has become less important to the people in this survey when they are deciding whether to buy new clothes or accessories. Interesting that price has kind of gone out the window. The value of importance respondents assigned to price, well, it dropped 13% compared with last year, and it fell across actually all sectors, except for luxury and beauty. Those ones people cared even less about sales at that level. 30% fewer consumers actually rank sales, and finding the best deal is very important compared with last year. That's interesting number there. Even in the off-price sector, where deal hunting fell from the top factor respondents were considering, it fell from the top factor to number 19 as well. The findings obviously are a big deal because retail industry is getting ready for that holiday shopping season, and everybody's expecting the holiday shopping season to be weaker than in previous years. We've told you those studies and predictions here at McCollum on Business over the last couple of weeks. Uh, Consumer sentiment continues to fall out there, the uncertain job market, and then you got that stagnant inflation, or at least persistent inflation, where it's kind of ticking up a little bit out there as well. So, there's a lot of renewed focus on execution, quality, and brand strength, especially as many retailers raise their prices to offset those tariffs out there. Right? So instead of buying something for, price being a big deal, and so it needs to be cheaper, people will spend a little bit more if it'll last a little bit longer right now, so they don't have to keep buying the stuff out there. So interesting, a retail study that's out there. And I know I'm experiencing it everywhere I go. It's, we got this on sale and that, and it just makes my head hurt with what we're dealing with. Like, just make it the price, man. Hey, the average gas price in Arizona, it's actually fallen a lot over the past month. There was some fear with that fire in California refinery that, gas prices were expected to go up, and they go up in big numbers. We talked about that last month. Gas Buddy kind of alluded to that. It might happen. But gas prices spiked about 3 weeks ago. They've come down since that time frame. Now, a lot of that has to do with that oil coming over from the Asian markets we talked about here at McCollum on Business. So the average price of gasoline in Arizona, it's at $3.38 a gallon. We had that story of the national average at $3.05 earlier here in the show. But $3.38, that means gas is down about 24 cents in the last month here in Arizona. So big news there. The gas prices coming down. Still way too high. Still way too high. And I don't understand why. I understand why, because the clean energy, clean gas. But I don't understand why we get our gasoline from pipelines here in Maricopa County from California. It's expensive. Well, could be changing, because a new 1,300-mile pipeline from Texas to Arizona, it's going to be built by Phillips 66. It's going to be operated by Kinder Morgan, and it's been announced that it's coming in now. They're calling it the Western Gateway Pipeline. It'll transport gasoline and other refined products from Borger and the Texas Panhandle all the way up to Phoenix here. Phillips 66 is going to build the entirety of the new pipeline. Kinder Morgan will actually operate it. That'll be their responsibilities. So if you want to get into specifics, for those of you that want to know, the pipeline will connect Phillips 66 Wood River, Ponca City, and Borger refineries in Illinois, Oklahoma, and Texas to Kinder Morgan's terminals in El Paso, Tucson, and even Phoenix up here as well. They'll also go to Colton, California, and Las Vegas eventually. Phoenix will be the last stop, and then they'll be able to reverse the pipes to go to California and then to Las Vegas at that point as well. The entire pipeline is expected to be completed coming up in 2029. So does that mean more gas, lower gas prices, especially if our gas does not come from more expensive California? That'll be nice to see have happen as well. And, so some good news there. But now we got to end kind of with, I guess, some good news, bad news out there. Through September, there have been 1,303 active notices of trustee sales in Maricopa County. So foreclosure listings here. That's up 30% from the same period in 2024. That's the bad news. Context is key, though. There have been record low numbers of foreclosures the last few years. So the 30% increase is actually a low number of foreclosures and trustee sales out there. So it's a big number in terms of 30%. But it's still a tiny number compared to history out there. So that's the good news. It's not a huge pandemic as of right now. For instance, at the height of the foreclosure crisis between 2008 and 2011, that was that big financial deal out there. Well, there were more than 10,000 active notices in that time frame. In 2019, which was a good housing economy and economy in general, there was a monthly average of 1,895 notices a month at that time frame. The current numbers right now, they're 31% lower than that 2019 average. So good news. Well, bad news is prestige sales are ticking up, and they're ticking up in big numbers. Good news is not anywhere close to high levels to where it's a big deal. Obviously, it's a big deal to the people going through that, but the numbers are still slow because the percentage is high because we've had record lows on that side. If you want to go nationwide, that's just here in Arizona. So nationwide, foreclosure activity has edged down slightly nationwide as well, month to month, but it is 20% higher year over year on the nationwide side of things. So we are kind of bucking the trend here in Arizona as well compared to nationwide. So good news, bad news there as well. And we'll wrap up the show with that news right now. I probably should have bumped that up in front of the gas one. Maybe we'll have some cheaper gas coming our way coming up. But hey, appreciate you joining us here on this Wednesday edition of McCollum on Business. Be back tomorrow. We'll see how the business goes, and will we ever see an end to this government shutdown? Does the market stop selling off tomorrow? Well, we'll have to pay attention to that. Tesla reports after the bell today. CPI report coming out on Friday. It's going to be a busy couple days in the business world. Come and join us, would you? Free YouTube page or Robat TV with your subscription. Join us, would you? See you next time, everybody.